Hello, good morning. Welcome to our virtual meeting to present the results of the second quarter of 2025. This conference call is being recorded and has simultaneous translation into English. To listen to the audio in English, please press the interpretation button at the lower right-hand side of your screen. This conference call is going to be divided into two parts. Our CEO, Andrea Louis, and Andrea Sperenio, our CFO, are going to present the highlights. The slides in presentation or in English can be downloaded from our investor relations website at www.bbseguridade.com.br. In the second part, we're going to have a Q&A session when analysts and investors may ask their questions. We will be back after the presentations to give you instructions if you want to ask a question. I would like to give the floor to Andrew, who's going to share with us the main highlights for the quarter. Andrew, the floor is yours. Thank you, Philip. Good morning, dear friends. I would like to start by thanking everyone who are with us in our virtual meeting to talk about the performance of the Seguridade in the second quarter of 2025. This is an important moment to highlight the results achieved from our commitment to value creation, innovation, and the continuous search for efficiency in all fronts of our business. Our net income, excluding IFRS 17 standards and extraordinary events in the period, reached 3.2 billion BRL, an increase of approximately 3% compared to the second quarter of 2024, with our annualized return on equity reaching the mark approximately 90% and advancing more than 15 percentage points compared to the same period of the previous year. Significant growth is also observed in accumulated result in the first half of the year, with a net income of 4.2 billion BRL, with 14% and an ROAE of approximately 95%, an increase of 12 percentage points. The quarter's result was driven by an 11.3% growth in operating income and a significant increase of 69% in our financial income, created by an efficient asset management in all of the companies of the group. Our retained earned premiums, the insurer's main revenue metric, grew almost 10%, totaling 3.7 billion BRL. The loss ratio remained at the lowest historical levels and ended the quarter at 21.5%, within an improvement of 5.7 percentage points. Our accumulation business pension reserves expanded 9.5% in 12 months and reached the expressive mark of 549 billion BRL. In savings bonds, we reached 1.8 billion in collection, a strong growth of 24.1% compared to the second quarter last year. In brokerage revenues totaled 1.4 billion BRL, with 5.6% in the quarter. The results presented reflect the management capacity and the merit of a tireless team for innovating and creating solutions that generate value for all stakeholders. The new products we launched this year are already delivering consistent numbers, which pave the way for the company to grow in a robust and sustainable way. We launched two initiatives in the end of March that have been gaining traction and are going to catalyze results for the company. The first one is the credit life insurance for private payroll loans, which totaled more than 94 million in premiums, and the second is BB Credit Life for consortium originated with premiums of approximately 82 million BRL. At the end of June, we launched Credit Life meant for credit lines for micro small businesses, a segment that we did not serve before. In just over a month, we had 69 million in premiums. In livestock insurance revenue, we had 69 million BRL in premiums in the year, guaranteeing new features that we launched for hiring, a growth of 48% compared to the same period in 2024. Our product to celebrate the 30th anniversary of AutoPAP has been a success. In 2 months, we had more than 135 million collected with a sale of 44,000 bonds. As part of our strategy of channel diversification, we reached the volume of 856 million premiums written through commercial partners, equivalent to 11% of the total in structured business. We have life co-insurance and solar panel insurance operations. We grew 40% compared to the first half of 2024. In cooperatives for agro resellers, the growth is 55%. We also sold 2.8 million low-income bonds to new customers with a collection of 11 million beer. We also advanced in digital channels where we made 330,000 sales in the semester, 46% of the new customers. In terms of premium bonds and personal protection insurance, we find products in our strategy to expand the base universalized protection solutions, and we seek advancing in our pursuit of research of efficiency and excellence in services. NPS, our main satisfaction indicator, advanced 5.7 points and remains consolidated in a quality zone. We reduced the number of complaints by 27% compared to the same period last year, and the churn fell by 10%, forcing the loyalty of our membership. These advances are a direct reflection of our management capacity and coordinated action of our companies. We have reduced the general admin expenses in all fronts, 7.8 percentage points in Brazil Corp, 1 point at BB Corretora, and 0.4 points at Brazil C. These efficiency gains are not just numbers. They represent our ability to do more with less, to deliver value with responsibility, to put customers at the center of our decisions. Now I would like to give the floor to Rafael, who's going to show you the main financial highlights for the quarter. Good morning, everyone. Thank you so much, Andre. Now going to the details of our numbers. Before going to more details about the result, I'd like to briefly explain to you something that is common here at BBSE Seguridade. We break down and we separate non-recurring items. But this quarter, we had an update in the stock for the settlement of court decisions. So this affected a little bit of our numbers by 62 million. And we think that this is an one-off item. We separated from the numbers of the quarter and year-to-date numbers. And this was a regulation change that we had, and especially the provision for claims to settle according to court orders. There was no regulation defining here. We still update in these provisions monetarily, and we had our own internal methodology using NPC plus 1%. And as of last, because of the new law, is that the monetary correction is IPCA Selic minus IPCA. So after the end of last year, we are booking these expenses according to the new law, and now we updated the entire inventory, and this created this impact of 62 million. So all of this is in our publications, and I would like to place focus, and then all the numbers that we are going to discuss are in recurring basis. So now starting in the net income is 2.2 billion, 2.3 if we take out that the time mismatch of the update of liabilities of the plans in Brazil Prev, a 20% year-on-year growth. Now in the first half, 4.2, a growth of 14%. So it would be 4.4 if we took out the impact of this time mismatch. So the time mismatch took out 154 million in the first half. First half of last year was neutral, so it was a detractor of our results. But we always reinforce that this amount comes back to our numbers, and it's going to come back to our bottom line in the second half of the year. That happened because in June, the IGPM had a strong deflation of 1.7% with an impact in the assets and a liability. The deflation was 0.5%, which was May IGP. So in July and August. In August, in July, it gets a little bit better. In August, it's going to be fully reversed. So probably in the third quarter, you're going to see the now the consolidated net invested income with a growth of 69% year on year in the second quarter, and 55 in the first half, accounting for a significant number of our net income. Now, going to the next page, this is the breakdown of our recurring managerial net income with all the company operating result and net investment income, which have contributed almost equally. So we had 345 million BRL in terms of operating results with a reduction in loss ratio. These are our main highlights in the year-to-date numbers. In terms of the investment income, we had a gain with a direct impact of the impact of the high Selic rate, plus a growth in volume, adding 258 million. So this time mismatch. We've set taking out 154, but then the mark to market adds another 173. And in the first half, we had positive, in fact, with a gain of the market to market of 23 million, whereas last year we had a loss in mark to market of 150 million BRL in the first half of 2024. So the combined effect in the financial in the net investment income, despite the time mismatch, we had almost 300 million growth year on year. Now going into the details for preparation. So in our insurance on page 8, we had premiums written in the second quarter dropped 1% year on year, and with a slight slowdown in a drop that we saw in the first half of the year, rather saying the first quarter of the year. So this 1% reduction was very much impacted by credit life and rural insurance, without going too much detail. But real credit life is being impacted by credit life companies. So we had some growth in individuals, 5% for individuals, but really for corporations, it's been going down markedly. Now, in terms of rural, and it's been in the press and in the media, it's slightly more difficult without crop insurance. And this is the main culprit for the drop of 3% both in the quarter and year on year. And if we see the first half of the year. So we saw a drop of 3.6 in retained premiums, and the factor explaining this was customers that left with higher tickets, and we ended up not being able to offset with new sales. Even though we had a slightly sharper drop in the second quarter, it's still in the first half. Other lines, they're growing with medium to high growth, all of them with good performance, both quarter and quarter, any comparing the first half of the year. So we had an improvement in loss ratio, and last year we had the disasters and the catastrophes in Rio Grande do Sul that affected our numbers, and we had other effects in crop insurance that in fact the center south of Brazil, but this year it didn't happen again, and then loss ratio dropped strongly in both comparison basis, and the loss ratio is the main component explaining the better combined ratio. Also in terms of operational efficiency, better G&A dropped year on year. It also contributed to the better combined ratio. On the other hand, you can see a high in commissions, and because it changed in the mix with a loss of crop insurance in the total with other kinds of insurance that have higher commissions. When we talk about investment income, the growth of 45% year on year, 42% in the first half, because of higher selling with a significant impact with the base of selling. And the growth has been growing, and then year on year, then 17% year on year, and with a better combined rate. And the main one, and can be a growth, and there is a recurring, and this is a one-off effect. And then going to pension, and then we had a 22% and a drop in the year direct effect of the regulation changes that we had with the introduction of iOS over PGBL, and this ended up reducing the inflow of funds, and which affected also the net inflows. So redemption increased 50 basis points in year to date, but quarter on quarter it dropped with the redemptions that we had until March of 11.6, it dropped to 11.1. And then we are still seeing, and so we don't see much volatility along the second half, and we are likely to see an improvement in redemptions in the second half of the year. Reserves grow, and then management fees dropped 1% year on year. This is a result of the dilution that we are seeing. Management fees built on a change of risk profile with higher share of more conservative products in the total of assets, and so they drive down the management fee. And then this impacted the drop of revenue and year on year, especially if we compare. So despite the reduction in revenue and management fee and marginal growth in year-to-date numbers, it has grown strongly 20% year on year, 16% in the first half of the year. And this is a result of the improvement that we saw in financial in the net investment income, not just because of a higher Selic, but also with a positive effect on mark to market that also contributed at a drop of a GPM with a significant reduction in the cost of liabilities. These are the main drivers for the growth of Brazil Prev, even though we saw this acceleration in terms of operational performance. Now, Brazil Cap, we had 24% in collections, 11% in the year-to-date numbers. Reserves grew 1%. Lottery prices paid grew 6% dropped to 6% year on year. And in the first half, we paid 31 million. So net investment income grew 6% year on year because of the financial margin. And then in the first half of the year, dropped 19% because compression of financial margin. And this is basically, we had in the first quarter the negative adjustment of their hedge because we opened the curve, and then we decided to protect most of our exposure to fixed income. When the company didn't have enough time to undo the protection, and then we had a negative adjustment of the hedge in the first half of the first quarter. You can see the net investment income has been growing in a sound way. And here you can see the variation in the net income, minus 5% year on year, 10% if we see the year-to-date numbers. And then BB revenue grew 6% year on year, 5% in the year-to-date numbers. And so this was the booking of post sales from insurance products and increase of the savings, the premium bonds, and that has a contribution in the brokerage. And net margin grew 3.2 percentage points year on year, 2.4 in year-to-date numbers. And this is a result not just of an improvement in operating margins, but also an improvement in investment income because of a high Selic rate. And the consequence of this is an increase of net income growing above the revenue because of a better financial result, 11% year on year, 9% in year-to-date numbers. And in closing, we have our guidance. So non-interest operating result, the range from 3 to 8, we delivered 7.4 this quarter. In terms of premiums written, 2 to 7 was our range, but we with a 3.4 going down, 3.4, as I mentioned during the presentation, a quite strong impact from corporate credit life. Pension plan reserves delivered a growth of 9.8 when the range was from 12 to 16. So these are our revised projections. And what we had to do is to adapt to the new regulation. So we have the IOF with the GBL that has a significant income in the short term. And then we had to adapt and with an impact and in operational results. The impact of IOF is the result of the collections in pension plans or premiums to collect in pension. Um, and this had an impact uh, in our operating results, and we had to revise the estimates. So this is 1 to 4. In terms of premiums written, so the range is from -4 to +1%, because of this very uncertain environment, especially in agribusiness. There are a few measures that are going on to try and accelerate the recovery of credit life. So this is very volatile. So we decided to review for premiums written. In terms of pension plan results, 9 to 11, again, the impact of IOF, and this is the result of lower collection that we expected. And we had to incorporate this in our projection. So we revised it down for a growth from 9 to 12%. So these were the highlights. And this is the result of the second quarter. And now we are moving to our Q&A session. Thank you so much. Now we're moving to our questions and answers session. Now we're moving to our questions and answers session. Please wait while we collect our questions. Now we are back for our Q&A session. As a reminder, if you want to send a question in writing, just click on the Q&A button in the lower part of the Zoom screen. We'll try to answer all questions here live. If it's not possible because we don't have enough time, and then we will give you an answer by email. We're also going to allow uh, some questions to be asked live by audio for some analysts if you click on the raise hand button at the bottom of your screen. So long as we say your name, please unmute your microphone and ask your question. Questions will always be answered in Portuguese, but if you want to ask a question in English, please feel free and we will answer here live. The first question comes from Daniel Vaz from Banco Safra. Daniel, please, you can open your microphone and ask your question. Good morning, Felipe, Andre, Rafael. Congratulations on your performance. I have two questions. The first one, I would like to hear, Rafael, about the commissions, unearned commissions in a brokerage company. So could you explain the cash commission? And cash usually is Brazil cap. So the cash is very much related to Brazil cap. So it's slightly different in insurance and PREV. Hello, Danielle. Thank you for your question. Good morning. So as to the revenues in the brokerage company, so it varies a lot from product to product. I'm going to try and simplify without going into too much detail, but I think this will be enough for you to understand how it works and why to explain the resilience of our brokerage business at the brokerage company and also the insurance company because of deferred mm, revenue, both in brokerage and premiums, because they have the same dynamics of deferral because of time. So in the brokerage, credit life and pension, we charge a brokerage fee above over the volume collected, and this is booked as cash. So there is no deferral. For insurance, it's completely different. So for the insurance products, both earned premiums in insurance and revenue from brokerage in a brokerage company, they are booked according to the effect of the risk of the product. So, for example, credit life, that we have the longest risk and we defer commissions sometimes for 5 years approximately. This is at the origin of the business. So the effective times is slightly lower because they are not carried up to maturity, and sometimes customers choose to renegotiate. So times is slightly shorter, but sometimes it's about 5 years. So today, um, commissions to be booked that are still going to be booked uh, at 5.7 million. This is the total that we call as prepaid, but pension mm, and the premium bonds. So once the revenues are immediately booked as cash, that's why they're very sensitive in the short term numbers. So once collection goes up in these two lines, immediately the brokerage revenues of the brokerage company go up. Similarly. Well, I asked because of that, because there was a flattening of the curve. It was 4, then it went to 5.7, and then it remained at these levels. So there is a factor to be. So the second question is related to what we have here. So as part of BB Seguridade, we have Marcelo Labuto back to Brazil SEG, one of the directors of the group Brazil, but in 2013 and 15, they were at BB Seguridade at the time of the IPO and so on. So I would like to try and relate this, whether it's possible, some potential discussion of contract renewal over the 5 next years, considering that we are getting close to 2031, the first renewal of Brazil SEG contract. And then we need to try and understand whether he's coming back to the group is changing, whether this has anything to do, and so that we have an update. And this is valid, especially considering the scenario of the bank, because capital is not so simple, and then it could kind of unlock BB Seguridade. Well, regarding that, Danielle, it's important for us to try and understand the governance flow, which are the duties of each one of the executive officers. So here specifically, Marcelo Labuto has broad experience in Banco do Brasil, was even the president of the bank temporarily, and then was the president of BB Seguridade. but he is being appointed to CEO for insurance operations. The discussion of agreements with partners, all the partners that we have, will take place at the level of BB Seguridade and Banco do Brasil. So the operational aspects we don't take part. So he's being considered as CEO of Brazil SEG to run the operation regardless of the discussions that take place at the level of partners. Just to make it slightly clear, the difference in terms of the duties and the roles of different executive officers in the companies in the of the group. So in terms of shareholders agreement, there's nothing going on now. Okay, thank you so much. Thank you very much for the question, Daniel. Our next question comes from Antonio Rue from the Bank of America. Antonio, good morning. You may open your microphone and ask your question, please. Good morning, everyone. Thank you so much for your time. My question is related to pricing. So when we look at the loss ratio and then close to the plus 30 in terms of operational results and the growth in premium, has there been any change or do you plan any change in pricing or pricing levels, especially considering this level of frequency and this level of loss ratio? Or is the idea that something is going to change in loss ratio, or do you see any prospects of it going back to higher levels? I'm just trying to understand what you think when we compare loss ratio below historical levels and also contract prices when we think in terms of growth. Well, thank you so much for your question. As to pricing, the focus might be slightly more agricultural. So it's according to expected credit life compared to historical levels is slightly above the historical levels. But here, because of changes that we have implemented, we expanded our target audience and our um, risk in terms of insured capital, but within expected. And now structurally is going to be slightly above historical levels in any way. In terms of homeowners insurance is slightly different from what we were expecting. And so there are many, and we have been a level of 30 to 40%, and the portfolio has been responding to that. In other lines, no changes. They're all performing very much in line as expected. With we don't see any indications and any to change in our subscription policies or in the underwriting policy. So in terms of crop insurance, we have some margin to be slightly more aggressive in terms of prices because in the last 3 cycles we've been having really great performance. But we need to be very careful because we are working with climate and we need to be very careful with that. Historically, it's not common to see this pattern of 3 cycles in a row with mm, with the quality of the crop without any major event causing any major impact in loss ratio of the company. So yes, do have margin to work on. We are going to work on prices to have slightly more aggressive prices than we had been working with it, but slightly more careful, very gradual, because the only line in our portfolio that is exposed to tail risk. So that's why we need to be very careful. So in principle, today, when we assess the projections, the most up to date in terms of climate, we are okay to work like that. And the predominance, especially in next year, is for it to remain neutral. And so the perspective in terms of the weather is very favorable. Thank you very much, Antonio. Our next question comes from Arnaldo Sirazi from Citibank. Good morning. You can open your microphone and ask your question, please. Hello, everyone. Andre, congratulations on the performance of this cycle. I would like to ask a question about the dynamic of premiums. July has ended, so I would like to understand your dynamics, especially for rural insurance after the Safra plan. And if you allow me, also in terms of premium, there has been a variation in the technical provisions that was really significant now this quarter. If you could explain it better. I'm going to answer your first question, and then I'm going to ask you to explain a little bit better your second question. About the first one, well, we've been seeing a reaction in crop insurance, and now it's still too early for us to extrapolate this from now to the end of the year. But that year-on-year variation rate that we saw in the first half of the year, it had a significant improvement in July and now in the beginning of August. So the downwards curve is not so steep anymore. We have more funds being allocated to small and mid-sized farmers. That is our target audience for crop insurance. So this composition favored us more than the composition that we used to have last year. But at the same time, there are some other factors that we need to consider more carefully, and especially the reduction of the subsidy for crop insurance. So we need to estimate the size of demand, the appetite of farmers in terms of risk, and how this recovery is going to take place along the second half of the year, but still too early to say anything. About your second question, if you could repeat that, please. I'm not sure I fully understood it. Well, in terms of retained earned premiums, there was a change in the technical provisions that was significant this quarter of 310 million compared to a much lower amount year on year. And is there any explanation? Thank you. Well, I'm going to try and infer the reason for your question. And this has a little bit to do with the answer that I gave to Daniel. So, as part of provisions for unearned premiums at Brazilseg, there is a strong component which is prepaid revenue and is coming especially from credit life. So, when credit life slows down, as we've been seeing, as it is a very long product, so uh, we are still booking lots of revenue, and it's one of the lines that grew the most, so that there is revenue from past cycles that we are booking. So we see written premiums going down by 3%. So when we eliminate the noise of reinsurance with crop insurance, and most of the drop is related to crop insurance, when they take out crop insurance from the numbers, you can see that retained premiums is almost flat, zero risk, and a growth of 2% year on year. And when we have retained earned premiums, so there is the risk that I issued, and then I go to a second time, which is the booking of premiums from sales that were made in the last 3 years, more or less, most of that. So then retained earned premiums go up by 9%. So there's no change in the criteria. This is linear deferral, differently from IFRS 17. So deferral is linear. So It's a result of this big mattress of earned premiums that we built over the last 3 years with sales of credit life that now are coming clear and being booked in our bottom line. Thank you very much. Our next question comes from Tiago Binsfeld from Goldman Sachs. Good morning, Felipe, uh, Rafael, and Andre. I would like to understand the changes in operational guidance. So the second half of the year is going to be very much similar to the first half. I would just like to understand, well, you said something about the loss ratio and the crop insurance staying flat. Is there a significant higher deterioration of the loss ratio, or are you conservative because of any other component of the operating result? Thank you for your question. Just to make it clear, we just need to review the operating guidance because of the incidence of IOF in a PGBL. If nothing had changed, there would be no reason for us to review it down in any of the neither of the two ranges. Now, IOF in impact in collections, so it's directly related to the brokerage revenue and BB Corretora, our brokerage company. So, if I didn't have the new law, the new regulation, we would be able to bear the previous range, because even though one line is slightly below what we initially expected, we had margin within that range to uh, absorb any other unexpected variation that, as you reinforced in the second half, especially the loss ratio of crop insurance. We don't expect any significant changes, but there would be some space in the previous range to absorb it. Now, in the second half of the year, with the impact of IOF, in the end, this margin is not enough to absorb any type of unexpected variation that we may have. So, because we are very cautious, we decided to review down the range to have a slightly more margin, um, if anything varies in projections, because the impact of IOF takes up 1 to 2 points depending on how we will be able to react in terms of the growth of operating results. So we had to incorporate this in our estimates. And the same thing applies to pension reserves. Now with IOF, this ended up taking out like 3 points on the growth of reserves. So this needed to be reflected in our projections too. So this has been the main driver, the main reason that led us to review the range. Otherwise, you would only have reviewed the written premiums and based on actual numbers and forecast for the second half of the year with a lower volume of subsidies for crop insurance, we had to incorporate that in our numbers. Thank you, Rafael. If you allow me to ask a brief question, we saw that solvency of your subsidiaries has improved. So how do you understand the capital of your affiliates and also payout considering this context? Well, yes, we are considering that, Tiago. In Brazil SEG, so we are very close to our risk appetite, and it varies from company to company, about 1.2, 1.3, the regulatory capital. This is our risk appetite. Where we would have more room is in Brazil Prev. Brazil Prev has not yet paid out the profit of the first half of the year, so there is a capital surplus, which is well above our risk appetite and Brazil Cap. There is a situation, if you remember, that because of the strong movement in the opening of the curve in the end of last year, we had to take capital from third parties to cover the liquidity deficit. But in the middle of the second half, we had recovered the capital basis, and we are very conservative. And so this third-party capital, and we are likely to use the results that have been generated to settle the debt now in September. So with all of this, we expect the payout for the first half, it's almost 90%. And it should be expected that in the second half of the year, the payout is going to be slightly higher than the first half, of course, considering a higher basis of profit than in the first half. So for the whole year, it should be higher than the first half. Thank you very much, Rafael. Second question from Marcelo from Bradesco. Marcelo, you can open your question. I mean, your microphone and ask your question. Thank you very much for the opportunity. Number one, I would like to have a follow-up on payout. So the company has most than 1 billion and 100 of shares in treasury. And as you had the buyback program, so the situation of Banco do Brasil was slightly different. Now we are seeing what's going on, the discussion at the bank in terms of capital and preservation. So does the situation in the bank change in any way? What you're going to do with these shares in treasury, whether you're going to sell and then the bank is going to pay and have a higher payout. So I would like to understand better the shares in the treasury. So the second question is what you think will be uh, uh, the um, uh, collection or in terms so if you could explain to us a little bit about what you are going, your inflow, at least into gross inflows in pension in the second half of the year. Thank you very much, Ms. Ari, for your question. So about the shares that are in treasury, we had the buyback program. Um, so our understanding here, so we have here the vision that the shares are not at the fair price, but we are aware of the impact that has in the bank's capital. So for now, we are not planning to launch any new buyback program. As to what we are going to do about that, this is a decision that is up to the board of directors. So on our end here, today, we don't have any reason to sell those shares to the market. Even though the program has been approved, we have the authorization for them to be kept in treasury and canceled or sold. But so far, we have no reason in the management of BB Seguridade that we're not planning to sell those shares. But this is a decision that is up to the board of directors, and depending on what they decide, and we as executive officers are going to do what they tell us to do. But so far we have nothing, no decisions has been made about that. As to the IOF, according to the new rule, it's very difficult for us to get to a number that is exact, Missouri. This varies greatly in the breakdown of products, and our group of farmers have a cash flow that is very much concentrated at certain times of the year that will have pension contributions in amounts that will be higher than those defined. So in our understanding, we think that um, it can veto 20 to 30%, uh, thinking in terms of collection. Now, but then on the other hand, we are not going to be passive, and have been adopting different commercial strategies to deal with that, working better on the scale of payment or the schedule of payment along the year, avoiding concentration at certain times of the year to try and minimize this effect. That's why it's difficult for us to give you an exact percentage, but it has the potential to get uh, in terms of collection. Thank you. Thank you, Marcelo. Our next question comes from Pedro Leduc from Itaú BBA. Pedro, good morning. You can open your microphone and ask your question, please. Good morning. Thank you for the call and for letting me to ask a question. As part of rural premiums, we've been seeing the crop insurance getting weaker and being offset by rural lien. This quarter, there is a kind of slowdown in these two products, but I would like to hear from you. How do you see the relative penetration of the rural lien and farmers' life? And how do you see this in the future in terms of growth and how these products are going to grow? Maybe penetration is high. So how do these two products within your rural portfolio, how are they likely to behave in the midterm? Thank you, Pedro. Thank you for your question. Now, trying to say what to expect in terms of the rural portfolio in the second half of the year. So you're right, there has been a slowdown in the second quarter, but this is the result of the comparison basis. So in the second half, you can expect the same movement. This rate is going to slow down both in rural lien and um, for farmers insurance too, so an acceleration in crop insurance in the second half so that the combined growth or the combined variation in terms of premiums written in the rural segment, the rural portfolio, the level is going to be higher than we have today if we consider year-to-date numbers until June. So this variation rate is going to be better in our rural portfolio in the second half of the year with slightly different composition. So if you think in terms of retained premiums, crop insurance just 2%, and so very low level. So as I said before, in one of the answers. And so crop insurance now is reacting in July and in August it's good too. So this is going to persist along the second half of the year so that rural as a whole will have a better performance. And this is implicit in the reviewed growth range that we have in our guidance. So in terms of penetration, we have a higher penetration. In terms of lien insurance, slightly more than in life. But here, so lien is mandatory. There are some lines that we still operate very little and with a growth potential in terms of Banco do Brasil, in terms of livestock. For grains, it's very high, but in livestock, still very low. Our next question comes from Evandro Medeiros from Sonar Research. Evandro, please, you can open your microphone and ask your question. Good morning. The volume of reserves in Brazil cap, when adjusted by inflation, it has been growing since 2012. How do you explain that in Brazil cap? Thank you. Evandro, thank you for your question. So it's a little bit difficult for us to analyze such a long time span because along all this time there have been many changes in our products. So what influences directly the reserves is very much the average time of bonds. So when we shorten the time, the reserve for the next 2 or 3 years goes down. If we have longer times, the reserve responds by growing. So 2012 and 13, there are very strong growth in reserves, precisely because of the longer times. And then we had a movement of shortening times, which persisted until 2019, 18, 19, more or less. And then now we have longer times again with AutoCap 30 years product. So we have longer portfolios, so reserves are likely to grow again. So this is very much related to the timing, to time, and that's why you see this variation. Thank you very much. Our next question comes from Carlos Gomez from HSBC. Hello, Carlos. You can unmute. The floor is yours. You may ask your question. Our next question comes from Guilherme Grispan from JP Morgan. Grispan, you may ask your question, please. Good morning, Felipe and Andres Perendio too. Thank you for the call. Uh, Thank you for taking my question. And I would like to hear your diagnosis. So there's a positive diagnosis. I see your market share in Banco do Brasil's market share in the agribusiness. And my question is because it's becoming increasingly relevant. And so in our numbers, two-thirds of Brazil's sec is agro. But when I look at the market share of Banco do Brasil 10 years ago, they used to have 65% of the market share in U2. And in the last 10 years, Banco do Brasil dropped to 53% market share. And after the crop, 53 is going to drop even further. But I find it interesting that you remain with 63, 64 market share in this industry. And so there was a mismatch or a detachment, a difference. So why do you think you have this market share in the industry? Are you going to lose it? That's becomes more competitive, both in terms of incumbents joining this industry. So what is your diagnosis and how do you see your leadership, please? Guilherme, good morning. I'm going to answer this first and then I'm going to give it over to Rafael to complement. So, considering the size of the market and our capacity to innovate and create new products and look not just to the origination but inventory too, and we can see this in rural Lean, Ouro Vida, and we think that we still have room to grow. And this is the way I see it. Of course, we see incumbents taking up space. We are way ahead of them, and the market's going to become increasingly more competitive. We can see major competitors, and we have this industry, and we are worried about that. That's why we have to become increasingly more efficient in innovation, monitoring, and in defining parameters. We have been reaching new levels in terms of the offer of products, and we need to remain very competitive. But in my opinion, of course, this is going to take a while still. And the vision of the bank, I'm not going to say because it belongs to the bank and I don't speak for them. There are many factors that uh, needs to be considered in the market, especially consider collateral and credits, loss ratio, capacity to protect our customers. So we think that we are going to be different for quite some time. But if you're not creative and have competitive value offer, yes, we are going to be affected more strongly in future years. For now, we remain at very good levels, always paying attention so that we can have the best in technology to offer to our customers. Just complementing. When we see the insurance products that they have quite strong synergy with banking products, so undeniably on average, considering the banking products, if we see the life cycle of products, they are the level of maturity that is higher than insurance products. And this makes it possible for us to advance these movements and to try to delay even further this context of more competitiveness and margin reduction, which is likely to happen. But as you said, this is going to be more slowly. A practical example of that in terms of funding products for farmers. So there has been a significant increase in recent years in the share of others funding lines, especially for farmers. Until recently, we didn't have an insurance product to farmers, and now we are advanced significantly in terms of crop insurance to combine it with a new funding mechanism. So we've been using very much the platform, which is a joint investment with Banco do Brasil to try and find alternative ways for traditional bank loans in the agribusiness segment. This is very clear. Thank you so much. Thank you, Guilherme. We have two questions here that were posted in our Q&A. One is very frequent, but those who are joining us now, it's interesting to answer. This is about the change in the flow of payments of dividends that it went from every 6 months to every 3 months to be quarterly. And the second question is what we think about the macroeconomic scenario and the main variables and how this can affect our businesses. First, the frequency of payout of dividends. So far, we are having our practice of paying it every 6 months, also considering the cash generation of the company. So the brokerage is a major source of cash generation. It can only um, pay out its dividends every 6 months. So we have no intention of changing that frequency, and this may vary depending on availability. We might have an extraordinary payout, but we are not saying that we're going to have a quarterly payout of dividends. As to the scenario, this is a very broad question. What we've been seeing in the short term, this scenario of a higher Selic ends up being beneficial for us, for our bottom line. It has had a direct impact in our net investment income. In terms of inflation, very beneficial with the plan of benefits in Brazil Prev and with the IPCA at 5% and IGPM at 1.3%, if I'm not mistaken. This is up to date. And so every point that IPCA is above IGPM, we have an impact of 30 million in our profit. So this is very positive. But then on the other hand, this makes it more difficult. If we have a high interest rate scenario, this makes it difficult for us to grow operationally because the operational growth is formed by lines that are somehow um, related to the Selic. If we have a 15% rate, so having a life protection or credit life for a credit operation, it's not the same as if the Selic is 8 or 7. And so this makes it slightly more difficult for us to grow, especially in terms of companies. As I said during the presentation, we are seeing a reaction of individuals, but for companies, we are feeling it even stronger. It's even more difficult. So this is what we have been seeing, and then we see the financial much more than offsetting this slowdown. Um, and this is not the best environment that we have when we look in the mid and long term, but in the short term, this is very favorable. Thank you, Rafael. Now we are ending our questions and answer session. Rafael, Andre, if you want to make any closing remarks. So I would just like to thank everyone for being with us and to say that I am available along with the investor relations team to answer any questions that you may still have that we didn't answer during our meeting here. So I'm ending my cycle in the company. So first of all, I would like to thank our shareholders, our controlling shareholder, Banco do Brasil, and especially the minority shareholders that believe in our company. My special gratitude to the whole team and our team that make this company be what it is truly. And I would like to thank everyone supporting us, everyone here at the studio. Thank you very much. Thank you all very much, and I hope to see you soon. Thank you. And as a reminder, we have a satisfaction um, survey with a QR code on the screen. If you could answer, we are very grateful to you. Have a good day. Thank you.